Make the stock prove to you that it deserves more of your hard-earned money. That's a great quote from IBD's Arnie Gutierrez. I'd like to explore that quote in this video with you, and let's look at 3 stock charts to drive the point home. Hi everyone, my name's Joe. I've been investing for 28 years, been a member of MarketSmith and follower of IBD for much of that time, and when I heard Mr. Gutierrez talk about this quote the other week, I decided to explore it with you, and I will put a link to his interview in its entirety in the description of the video. Before we begin, this is not investment advice, just my thoughts on this quote. And 2, I encourage you to check out my Patreon 7-day free trial, link in the description below. Let me say the quote one more time. Make the stock prove to you that it deserves more of your hard-earned money. We work really hard for our money, so the last thing we want to do is buy something and then have it go down. Now, of course, this is unavoidable, especially when you're using tight stop losses. We are going to get stopped out some of the time, but we can greatly improve our odds by letting the stock prove to us that it's worth further investment. How do we do this? By only buying the stock as it's going up. And we don't just throw money at it. Oh, I bought it and now it's up 7% more. I'm gonna put more into it. Oh, now it's up 13% more. I'm gonna put more into it. No. If you buy a stock when it's overextended, you are playing with fire, metaphorically speaking. What you need to do is wait for the stock to properly set up. Mark Minervini, 2-time U.S. investment champ, always asks the question, if I didn't own this stock, would I buy it right here today? If the answer is yes, then that's a spot to add to the stock. If the answer is no, because it's behaving choppily or overextended, then you don't add to the stock. And here's what you never do, and here's what many many unsuccessful investors, many semi-successful investors, and many successful investors that would be more successful if they didn't do this thing. What is this thing I'm talking about? I'm talking about averaging down. Oh, this is a great stock at 100. Now it's at 90. I'll add some more shares. Oh man, the fundamentals on this stock are amazing. The story is amazing. And now it's at 75. I'm going to buy even more shares. Oh, now it's in 50. I'm going to load up the truck. And in reality, this is an old William O'Neill quote. If it's such a great stock, then why is it going down? There's only one good type of stock, and that's the stock that's going up. So averaging down is a fool's errand. It might never come up again, or it might take weeks or months or years. And let's say it does come back up to your purchase price 7 months later. Then no, you didn't lose any money, but what did you lose? You lost time, right? You lost 7 months. And in a strong bull market, you could have turned that money, you could have compounded that money impressively instead of just scrambling your way to break even. Consider, here's a little analogy. Consider a new stock that you've purchased, like a new employee in your company. That employee has to prove his or her value before you start letting them carry more of the load, so to speak. Let's look at 3 charts now. I'm going to turn my computer screen on here, and let's look at why we don't average down, and then 2 examples of letting the stock prove itself to deserve more investment. In fact, let's flip that. I'm going to show you 2 stocks from my current Patreon portfolio and how I let the stocks prove themselves and then where I add it. Okay, here's a stock from my Patreon portfolio, the General General Electric, which used to be this big conglomerate and then just slowly spinning off its way into being mainly an aerospace company. Technically speaking, we've got this really nice prior uptrend. We've got kind of a flat saucer base, and then morphing into an Eve and Eve double bottom. If you've studied Thomas Bukowski, here's your first hump. Here's your second hump. You want the second hump to undercut the first one. And I began my position right here as it crossed this little bit of supply. And we got a fractal here. Here's your double bottom. We've also got a little triple bottom or shoulder, head, shoulder within here. It would have been nice to have a little bit more of a handle, but big caps often don't make very good handles. So here's my half position that I put on. And then what do? I wait for the stock to prove itself and set up again. Now in this instance, it only took a few days. A few days later, it gave us a little pause pivot, broke into a fresh all-time high, cleared the lip line, if you will, of this double bottom, and I added to the position. And then I wait for it to prove itself. And here it gave us a really nice cap pattern of 5 or 6 trading days, nice tight trading, quiet volume, and then a strong move to the upside. And so I added to it again and I doubled my position. So I have a worse cost basis with each of these, but the stock is proving to me that it's a winner, and it's setting up nicely each time. And now I wait, right? And I wait for it to play out, and I wait for it to set up again. Maybe it'll give me a new base. Maybe it'll come down and bounce strongly like a tennis ball off of the 50-day. That's one example. And at this time, if you are still with me, I would love it if you would press the like button in the video. I know that's annoying to do, but it does help get the video in front of more viewers. Now, BRBR, this has been one of my big winners so far. I want to say this year, but I guess it's mostly 2023. So let's take a look at this trade. We got a prior uptrend. We've got a saucer base. I started the position as it just was creeping up the right side of the saucer base, clearing this supply, all of these trapped buyers in here, cheating a little bit, as Mark Minervini would say. And then I wait for it to prove itself before I add more money. Notice that I don't always jump in with all of my money. I often will do a quarter position, third position, half position, and then bump it to full position as it improves. And then another thing to see on this chart is I trade around positions. So this was back in summer 2023. The market was a little bit dicey. So I took half off for 9% here, selling into strength. Then it gave us another little flat base area, came down near the 50-day, and it's actually a good sign that it didn't touch the 50-day. The institutions came in before it hit the 50-day, waited for it to break out of this little flat base, and I added some more shares because it's proving to me that it's deserving of more shares. Now notice I didn't just add willy-nilly. I didn't add up here. Right here, it's extended. And now I'm just letting it play out. Here's a little pullback buy. I could have added, again, one more time right there, but I let it play out. I sold half into strength. It got way overextended here, came in with the general market, bounced strongly off of its simple moving average, 50-day simple moving average. I bumped it to the full position again. So let your stocks prove to you their worth, that they deserve more of your money before you put more money into them. Let me show you what you don't do and what many rookie and veteran long-time investors do, which causes them to fail or hamper their success. Okay, here is Zoom Communications Back in 2021, it had phenomenal fundamentals, triple-digit earnings, triple-digit sales. I'm actually making that up. We'd have to check. But I know it had phenomenal fundamentals. And here we have, okay, here's your William O'Neill cup with handle. It's a little bit small. I would have been wary about it right there. But just for the sake of this exercise, many investors, I'm sure, saw this cup with handle, saw this nice breakout by the breakout. And then it starts pulling back. So what do I do? What does Arnie Gutierrez do? We wait for the stock to prove itself. But a lot of investors don't. Oh, well, I got it at 400 and now it's at 350. It's on sale. I'm going to buy more. Well, then what happens? Big gap down. Oh my gosh, it gapped down to 300. What a value it is. It's a blue light special. Remember Kmart? No, you don't. You're probably not as old as I am. And then look what happens. Slides sideways, keeps going down, keeps going down. And now it's at 100. And now you're thinking, well, all right, if I just triple up here, then I'll have my cost basis will go much lower. And then what happens? You got dead money and you're trapped and you're praying to the market gods and you're reading every document, every presentation there is on Zoom and how it's going to go up someday, and you are suffering from what? I don't know. Acid indigestion. That's no way to trade, right? That's not how we operate. So do what Mark Minervini does. Do what Arnie Gutierrez does. And that is buy stocks as they go up, when they set up again, when they've proved to you that they are worthy of more money. Do not buy a sinking stock, no matter how great the story is, no matter how great the numbers are. The numbers on a stock are always the best when it starts going down. They top out when their fundamentals are incredible. And I want to just show you right now, I am partnered with Seeking Alpha Premium. Let's just look up. BRBR has been a tremendous winner here for the last couple years. Let me show you BRBR. Look at this 5-year chart. What a champ it's been the last couple years. Let's use my partner here and just glance at some headlines and see what we can see. So we go to Seeking Alpha Premium, and there's a link for this in the description. And if you end up subscribing, I'll get a small commission. And here I got a portfolio on here of stocks I own, stocks on my watch list, and they update real time over the course of the day. Let's click on BRBR. Actually, looks like I don't even have it on this list. I should have it on that list. BRBR, Bell Ring Brands. It's a protein shake, protein bar company. They're not changing the world, that's for sure, but they are making a big profit and their stock is going up. So we could get on Seeking Alpha here, and there's all sorts of financials. We could look at some momentum quantitative information. But what I like most is reading the news, and I like to read the analysis articles. For example, let's just look at the top one here. Bell Ring Brands, strong business growth momentum, but valuation remains a headwind. We can click on it. We can read the summary. We can read the article. And if we read the first, if we read the latest 3 or 4 articles, or at least skim the summary, then that's the beginning of our fundamental research. We combine the fundamentals. We combine the tech. Here's something from my friend William Sanchez. Joe, you need to win the trading championship so you could up your prices. Yeah, he's talking about my Patreon. My Patreon is pretty cheap right now, and I am going to raise the prices at some point. My Patreon, I show my portfolio and focus list every weekend. I should wrap this video up. I know you guys are busy. Let me know your comments or questions below. I was trying to think of something else to say, but I think that's it. Good luck in the market. I will get out another video one of these days. Take care. And for my Patreon members, I'll get the video every weekend. Don't worry about that. I'll get it done. See ya.